here. But I think the interesting thing to note here is that, yes, Bernanke had made a speech saying that it would be a wrong move to cut asset purchases or raise interest rates. So that should have been supportive for the market, but that wasn't the case. After his speech, the market just kept moving down. So it really does point to, we've been, as you know, we've been looking for the first high above the level, a top in the global indices, the first high above the level for the S&P 500 here at the medium level 1650, and the first high above the level here. And we've been sort of poking around with these highs here. But it's sort of finally come in through here, obviously. So we're going to see a larger correction across the 1650. Now, what I not quite sure about just yet is that do we have the top of wave 3 here, or do we have wave 5 there? And wave 5 would be coming up from this low here, would be up for 1 here, back for 2 here, and then up for 3 here, back for 4 here, and then up for 5 here. Okay, so if that is the top of wave 5 there, then the wave 4 that we'll be looking at will be coming back into the wave 4 of 1 lesser degree through here. So first of all, there's a target here at 1530, thereabouts. Okay, if it's going to be, if we've got it right here, and we've just got this as a third wave here, then we'd be looking at a ABC correction, which would be the A wave, the B wave, and the C wave back into this area here, to the wave 4 of 1 lesser degree area and through here. This particular move to the downside here, if we have a look at that, is in 5 waves. So still can't sort of see it there on the 2-hour chart. So going a bit closer through here. So if I can just open this up a little bit through here. Still a little bit tricky to see, but the bottom line is that we've got wave 1, wave 2, wave 3 is developing here, wave 4 and wave 5 here. So we've got we've basically got an impulse wave to the downside. So that means that 5 waves down, we'll get 3 back into this area here, the supply area, the 1665 to the 1672, and then further downside from that point. It's natural just to see it bounce off here to go back up and retest supply there. It's always a battle between supply and demand, and we can see where the most volume is sitting simply by looking at the most price action, time spent at a particular area. And we can also nail that in using psychology and the psychology of numbers, and we know our numbers reasonably well. Of course, there's always improvements to be sort of had. Look, this is the same picture with most markets. The Dow Jones the same as well. And yesterday, this is a daily chart for the Dow, and yesterday we were considering this being the 5-wave structure to the upside, and this line here was the distance of wave 1 when we're counting up to wave 1, 2, 3, 4 and 5 coming up through here. So we were looking for around this target here. However, that said, the 15,300 is very significant, so we need to allow this to play out. If the market found 15,200, the pivot within group 1, minor group 1, if that became the resistance there, then we'll be seeing a larger picture unfolding across the 15,000. The distance above will be the distance below, and that will bring it back to the wave 4 here as well. So it is a significant situation here, and we need to move and groove with that with that top there. So once again, this move down through here for this market is in 5 waves, so we're going to see a bounce there as such there as well. I don't know if I got that further down here. You can just have a look in here. I mean, you can spend your own time on it as such through here. So expect the bounce off here, retesting supply at maybe even 1550, 1572 max, 15.4, and then down again from that point. The European markets are the same as well. This is the FTSE here, so it's already got its 5 waves down. So just on the 20-minute chart here, the 1, the 2 here, the 3, the 4, and the 5. So we can expect to bounce back to the 6, 8. 8's, well, it's an even number, and it's significant and so forth. So even if it does go higher, this is obviously the first one. This is the second one here. So it could come up to the 60. Well, 61.8 retracement level is the thing here. Well, the 38, same thing. The other side there. I don't normally use these much, so I just see it by eye. But is the group 1 here, 10, 20, and 30, finding support on top of 68.30 would obviously give it further to the upside. So if it came up to this area to retest this supply here, this volume here, then it's likely to come up through here and then be sold off from that point there. So it is possible from that point. If the 72 here becomes the resistance, you can short from there. And it is a significant number here as well, because it's 772. It just seems to carry more weight than a normal 72. So 272 and 772 just carry that bit of extra weight there. So, you can use that if it becomes, a support or a resistance there. So we're looking for a 5, 3, 5 structure as an ABC correction, as a simple wave 2, and then wave 3 to the downside. Wave 3 to the downside, or wave C should be, at least wave C would be the same length as this. A wave 3, we could also take the length of this and add another 40% onto that as well. So the Australian market, before we sort of look at the Australian market, I'll just bring it up here on the daily chart here, just so we can explore the possible wave counts through here. Firstly, I was looking at this structure to the upside like this, actually, in terms of up for wave 1 here, and then wave 2 to here, okay? And then the third wave all the way up through to here in 5 waves, the 1, the 2, the 3, the 4, and the 5 to here. So that's possible. If that's the case, then we'll, as a wave 3, then we'll be looking at from here, we'll be looking at a 38.2 retracement level. So we're looking into around the 5-1 here. In fact, the fourth wave of 1 lesser degree also is significant as well, because that's where volume support is at that point there. So it's a volume thing. So, but that's where it would come back to. So we'd be looking for a move down through to here and then wave 5 up through to there, if that's going to be the case. Now, the other side to this is, just have a look at this, just in case we got it wrong, is that this structure to the upside here is that we'd move out this one here and this one here for the time being, and then this would be, this wave 2 here would be an A and a B and a C for wave 2 here, okay? And then this would be the whole third wave coming up through here, so we'll just move that out the way for the time being. And that, so that would be the third wave there, that would be the fourth wave there, and then we've got the fifth wave in through here. So, and then of course that wouldn't be there, that would be upside down. In fact, what we'd be looking at that point would be a much larger correction into the downside through here across, because this is really the first high above the level of 5,000 here. So we could say that, the market moving down from this little point here, if we just get rid of this scary one. So this move down through here, because it's the 38.2 retracement level on the wave 4 of 1 lesser degree, and it's 5-1, all the rest of it, we'll see this move down through here, and we'll see some sort of bounce off here. Okay, that bounce is going to come back and check that supply area there. If it fails at that point, which it will fail to some degree, but we really need it to come back down and find the demand from this point. And if it does find demand from that point, well, then it will push up from that point there, and that's all sort of rosy at that point. However, if that's not the case and this gets forced down through here, and that would be forced down as such like that, and then we'd get a lower high here as such, and then we would see further, lower thing through here, and then we would see a retest back to this area through here, and then that would be the short trade setup there, especially if that move up there is on lower volume, okay? Then that lower volume to the retest is confirmation that we'll be getting this here, and it's really just the supply chain coming down through here, nailing those tops there. So that's how we would work that out through here. So it's going to take a little while to get down through here to get through all of this really. So, you're not going to really sort of miss much, and you can put little trades on these guys here if you see those come into play here with the view of, getting much further down through here and taking these lows out through here, looking at the 4.8 at that stage. So it should be interesting, and you just need to be a little bit patient and use a bit of grey cells, and you should be able to sort of work it out. So this structure, this is the 4-hour chart here. The move coming down through here, I can't work it out actually coming down through here. It's not a clear impulse. It's actually got the, if I looked at it properly, then it would be a whole series of waves 1s and 2s with a much further downside to be had. So that's kind of what it's displaying to me, and it is moving down rather quickly through here and slower to the upside through here. So, but once again, that 5.1 will really sort it out. Yesterday we had a target of 51.50 and 51.30 to the downside. I can see that this has still got further to move to the downside through here, because we got that move down through here, 30-minute chart, and then back up here. So this would be down for 1 and back for 2 here. This will be the third wave. This will be some fourth wave here, and then there'll be a fifth wave. There'll be a fifth wave down through here. But it still keeps this one here intact. So this is like down for 1, ABC back for 2, or down for 1 here and ABC back for 2 here. Not that it matters that much. So we can certainly have a larger picture to the downside unfolding. This is what this pattern is suggesting, but it really comes back to the 5.1 through there. The Australian banks would lead it to the downside, and we've got support from the materials sector. So let's have a look at those commodities. Okay, on the positive side of things, base metals were up firmly and, well, quite nicely really. So looking at copper here, US copper, we've made new highs here. We've touched on 340, whole number. So we can expect that to, have a reaction, have the arrival, the reaction. Are we looking for support? And once it's got support, then we'll look for a push up to make new highs here, and then support back on the 40 there. So we could also, I'm still unsure about all this wave count through here. There's still a couple of different options with all of this. So I just need to be a little bit careful. But what I wanted to point out here as well is the BHP in Australia here. So what we have now, looking to the upside here, is we have those 5 waves there, okay? So we've got the 1, the 2, the 3, the 4, and the 5. So now we can have a look at getting an ABC correction. If we're going to get an ABC correction through here, then we need a higher US dollar, and we also need to see the this coming back into the copper market here. That would also pull down through here as well, which would sort of make this wave count here a little bit sort of weird through here. It has made a new high here, so it's satisfied the ABC correction through here. So I'm still considering this an impulse wave up through here. All the structure looks quite solid, but if it breaks the 330, then it's obviously pulled down, the 61.8%, and it's just a bit of a breakdown. But I kind of expect that looking at the BHP thing. So just sort of bear that in mind. And with the BHP thing here, we have to expect some type of correction across here. How far will it come back is always a little bit of an unknown. The fourth wave to one lesser degree is always a first sight to look at. Obviously, with 5 waves up, you'd be looking at the 61.8 retracement level through here. So that would come back to the 32 area here. So that's plausible as well. So like I said, when this started through here, we were waiting to see if we do get 5 waves. If we do get 5 waves, then we wait for the ABC correction to come in, and then we'll move up from that area as such from there. Also just wanted to point out the banks as well. I mean, our Australian banks are, looking quite sort of weak. And if you look at the XXJ banking sector, then you'll see that you'll see that there's further downside there. From the 6,800. But in this particular case here with JP Morgan's, we can see that We can see that we've hit 55, so we'll have a correction back into 53 here, but it'll only be wave 4 through here, and then we'll see a wave 5 up. So there's still more in the US banks to chase to the upside. So if you're doing trading, if you're doing short-term trading, it's good to look at the US markets. I mean, I say that now that the indices have got a short-term high there, but looking at this here, this fourth wave here, would sort of look at the S&P 500, coming down to 1530, across the 1650 area, the medium level there, that first wave 4 that we looked at, the shorter one would be sort of more in line with what's going on through here. The moving on to softer commodities, the gold and the silver here, the wave 4 is coming to play, and we're looking for the wave 5 to come to the downside. So we know that from this bounce we had the other day, we're looking for a wave 4 to come back, somewhere up into the 1390s. It's come up a little bit further than that, and we had that spike last night. So, but we've got that clear ABC correction there, and that's what we were looking for. So that's been rejected, and now we've got this move to the downside. This move to the downside will be in line with the indices as well. So we would consider this coming down for wave 1, coming back for wave 2, shorting it into this sort of area here, and then moving further down here with a target at the 1300 down here for US spot gold, which also gives us a nice, longer term short. We should have put short positions in yesterday for NCM and MML and those sorts of stocks, so they will have lower to go as well. Just sort of drilling into that a little bit through here to see what else I've got in through here. Okay, so I mean, yesterday we were looking for, just to sort of track this out here, we know that we had 5 waves up through here. We're looking at an ABC through here, and then we were looking for the C wave up as wave 4 here, and we already had that in play there, so that was wave 2. So 1, 2, 3, 4, 5. So we'd have to put that little guy here. This one over here is wave 4, and then this wave 5 can go in there as such as wave C of wave 4, yada, yada, yada. So we'll be looking for wave 1 down to here. We'll be looking for, the norm would be the 61.8 retracement level coming back up through here, and it would be a simple ABC correction, which would be 1, 2, 3, 4, 5, then the A, B, and C, then the 1, 2, 3, 4, 5, as such into the 50, 60 area here in this block here, and then it should work itself lower from that stage there. 5 waves down, 3 waves back up is what you want, and then move down. So the 370 is where you can start sort of shoveling it in from once that's retested resistance, and then look for the 65 to be the resistance. Take some profit at 1350, wait for the bounce, it's back to 360, hit it from that point, and then it should work lower, and you should get it down to 1330 down through here, where it start to get quite bouncy. The orders short covering will come in on those areas through there. Silver's the same pattern as well. The oil market is on track to move lower now that it's under the 95 here. The 95 hasn't been retested, so as we get the bounce in stock, the ABC correction rally in stock, we'll see this retest, this situation through here, but we're still looking at it moving further down through here. But I'm also mindful as well, this does also look like a 5-wave structure to the upside, so this can also be counted as an ABC here, and finding support on 95 would bring it back into the fold of being positive again. At the end of the day, in 80% of the time, it will be following stock, and we can see stock moving lower, so we'll see oil move lower as well. Let's have a look at FX. Okay, first up is the US dollar, and we were looking for this to come back in as a wave 4 here into the 83.45, 83.50 is a stronger number, of course. So yeah, and we've got this as an A and a B and a C correction through here, so a 3-wave structure. So we should see further upside towards the 85 there to complete the wave 5 up through here. Then we'll see a correction is an ABC for wave 2, and then further upside once again. So still still on a positive wave structure to the upside. Yeah, so it's all good there. The euro, there's a shorting opportunity into the euro as well. So we've had that retest of supply in the bigger picture here of 130, and as wave 4, and there is other ways to count this as well. We can count this as down for 1, back for 2. We can also count this down for 1 and back for 2 here of the next degree smaller, and we'll be looking at that more closely, but we're still, for the meantime, we're looking for this to come down. Now, like the indices, this move down through here will be very close to being 5 waves and sort of completed, or even a bit lower into here. Once that occurs, then we'll be looking for a retest back to the 129 through here, and shorting at 129.10 or 129, well, wait for the retest, and once the retest fails there and starts to move down, then you'll be shorting from there. So the 128.72 as resistance, but resistance only once it's gone above the 72. So it comes up, it's got to go, it'll get resistance first up, but it's got to go up through it and then back down, then back down through it. So let's have a closer look at that, because this will be the short trade coming down through here, or adding to shorts if you're long-term long. So what we were looking for yesterday is we're looking for an A and a B and a C correction. Wasn't expecting it to, well, according to the trading levels, we would see a retest of 130. According to Elliott, would see, coming back up into the 129.50 area through here. But, there was headline news that skewed markets and so forth, so that's what happened. So we're looking at this as being 5 waves down through here, and then we'll be looking for, once it finishes, it may even come lower into group 1 through here, but we'll see some sort of ABC rally coming back up. And if you leave that trend line through there, it could also come back up and hit that there, and then roll over from that point there. So that would be the shorting area there. So putting short trades in, if you're not around, put limit trade short here, limit trade short into say 129.10, and then keep the stops above the 129.50. I mean, that long way away. It just depends on how you trade. That's all. But we're expecting new lows through this this low through here. Main point is that there will be some sort of bounce off here. How far it comes back is a little unknown. But the 61.8 retracement level from 130 down to 128, technically should be up here, but we know that the euro has shallow retracements, so we can expect this level through here to look for shorts there. If I can just come in here and look at this a bit further. So look at it looks like just on the wing here, that would be the settling in here. That's obviously the third wave. This is like a little fourth wave here and the fifth wave here. So this looks like a little impulse wave here. So we can be looking at this as the first little structure to the upside. So there'll be some move up through here, and once we've got that little move up through here, somewhere up through here, then we're looking for weakness, and you start looking for short positions from this area through here. May pop up into the 29, 10, 20 area through here, but allow it to mature somewhat, and I think it's easier to get, not to be perfect, but just get different orders at different at different prices, because that way, if they're all at different prices, then you can unwind them. If the market comes against you, you take that one out, you take that one out, and when the market moves forward again, then you add it back in, and so you're basically controlling the risks. There is cost and small losses, but if you're building into a trend, then you need some sort of plan, and working with the waves, the tide moving in and out is the way to go. All right, the Australian dollar is a little bit weaker because first of all, it's taken out its previous lows here, where the euro hasn't done that. So the other side to all this as well is that we've got, for the first time, we've got a risk-off situation with the S&P 500, because the S&P 500 has got 5 waves coming to the downside. So we've got a positive correlation between the euro and the S&P 500. So you can take those crosses up against the dollar to the downside, and even the yen as well. So, but in this particular case here, we were, as you know, yesterday looking for a wave 4. We're looking for a higher wave 4. looking for the wave 4 is the same length as wave A here. It's taking that distance here. And we understood yesterday that we had an A wave here, an A and a B and a C wave here for the B wave. And we were looking for a C wave up, looking for it to move up a little bit higher, and I thought it would have run higher with the commodities, but obviously not the case. It's really quite short in relationship to that, probably 61.8% of the length of this one through here. All the same, it's done and dusted, and the 98 is finished here. So this we got here counts reasonably well. The 1, 2, 3, 4, 5 to here as 1, back for 2 here, the third wave through here. So you can see the fourth wave moving through here. Yes, it may go up into above 97 into group 1 here, but group 1 will probably hold it and then it'll fail. It's kind of good if it does go up there and then comes back down, then finds resistance, and then you can short it from that point. Otherwise, you can do the Dow theory situation and take out, take that low out through here when it comes, or even this one through here. But even better still, you would be looking at the price, because traders will be working around the price. So the most important point here is the is a 96.72. Okay, so that's the one that we need to be working with in this particular case here. And of course the other two levels around here as well. We've got the 80 through here. So as that comes down here, that will bounce off the 80, and the same with the 65 as well. So once the 72 becomes the resistance, then I'm moving that around, sorry about all that. But once that's 65, once the 72 becomes the retested resistance, glean a small position. When the 65 becomes the resistance, then you can trade down to the 50. You can cover at 50. If you're really intraday trading, you would cover at 53, because the orders will start building up at 50, 51, 52, and 53. So that's where it'll start slowing down to. So if if you've got a lot of contracts and you're trading fast and hard, then the 53 is there, because you would expect to bounce back to the 60 or 56 to 56 to 56, 58, and 60 would be that sort of the bounce high there, and then you can look to short it from those points, and build some positions above that in that area to get under the 50. And once you got under the 50, you can trade down to the 30, but trade down to the 33 and cover at that point. And best to take the money at the number rather than sort of having a trailing stop down there as well, if you're intraday trading, that is. Alrighty, well anyway, that's looking for wave 5 to come down through here. The wave 4 should pull back 38.2%, but I wouldn't bank on that, because that spike in that wave 2 was sort of headline news, but still comes in at the 79, 97.20, the area through there, but may not even get up there. So but anyway, shorting up through these little areas here. Alrighty, well that's it. So stay short in gold stocks. The US banks that we mentioned to be long in, they will obviously be pulling back into a small wave 4 as well. Let's see how the indices travel after their ABC correction. Well, what I mean by that is we've got our first 5 waves down, we'll get 3 waves back, and then we'll get another 5 down. So that though we should be able to understand at that point in time what we're looking at. Would we be looking at a larger 5-wave structure to the downside, or just that ABC correction there? So anyway, we'll work through it. Alrighty, that's it, I think. So yeah, look, Thursday's a bear day. If it's down on lower volume, then we can expect the rally to be on the Friday and the Monday. Okay.